Hello once again, everybody. This is Rich. I want to show you in this short video the way that you can consistently approach the markets that you're trading and usually reach your goals within the first 30 minutes after you start trading. And I'm going to focus in on three markets today. First one is going to be crude oil. Now, typically in crude oil, uh, normally we like to start trading what we call the pit open session. That's in crude oil, and that's trading starting at 6 a.m. Pacific. That's 9 a.m. Eastern, and we're looking for a momentum type setup approach in the markets, which means that we're going to go with the flow of the direction of the market. Now, in order to do this, you've got to have a good set or combination of indicators that allow you to filter the momentum of the market and then enter trades. In this particular instance, we're using a very nice indicator that combines other indicators and produces a nice clean signal. This is called the octopus. And so our first trade setup is right here at 6 a.m. It's a long crude oil moving to the upside. You saw initially, if you were trading in multiples of 2, and that's the preferred way to trade, you're going to enter 2 contracts, do a scalp anywhere from 5 to 7 or 8 ticks on a scalp, and then try to hold the runner. Now, this particular runner, if you did that, yielded about 40 to 45 ticks eventually as you moved up all the way. But notice you had a second entry here. We follow a 2-arrow rule, which means we'll take arrow number 1 and then arrow number 2, and then what's called the bite out of the apple if that arises, and that's what happened here. This was arrow number 2 here, so that would be trade entry number 2. But you would use a relatively tight stop on the market, and then this is your reentry right here. As you got taken out, you back in on a reversal bar, so you have your runner running again or a brand new trade. Eventually, we moved up here to around the 43.20 level, and if you held from back here, that resulted in a good 60 ticks. Notice we've only had about a relatively short period of time go by here, roughly 15 or 16 minutes, but again, up very nicely as far as the trade setups. And you'll skip this next one because this does not conform to the rule that we're talking about, and that is only taking one arrow and then the second directional arrow in the same direction as the first one with a second bite of the apple. So this trade is not something that we would consider. Now notice our time. It puts our time out now to 6:30 Pacific. That's 9:30 Eastern. That's 30 minutes. But in trading this methodology, you're done reaching your goals in 30 minutes. Let's take a look at some of the equity markets now. The next market we want to consider will be the Russell. We're going to apply the same logic, the same entry type technique, the same filters, same indicators. However, our trade time, unlike crude oil, the pit open is 6:30 a.m. Pacific, that's 9:30 Eastern. So we're looking at taking trades again in that first half hour or when we reach our goal. Notice if we look back, here's our time, here's our pit open time, 6:30 right here. We would have actually missed this first trade right here because that was prior to the 6:30 time. So because of that, we like to look back. We want to make sure that there weren't 2 entries already in the same direction. There were not. This would have been entry number 1, but it was right on the cusp. Just missed it. This was entry number 2 then. This was the entry right here. Notice the trade went on to make a nice scalp. However, not a runner, and if you do like a lot of traders do, they put their stop very tight right under here. Chances were good it came down and caught your stop by 1 tick. The markets are very efficient at this. If you recall, I produced a video last week about the dangers of trading with stops that are too tight. But even if you did have a tight stop under here, this is what's called the second bite out of the apple. We'll come back in on that trade, whether there was an another arrow here or not. In this case, there was. Got the trade to the upside. You'd be back in the trade on a runner or a new trade if you like. Roughly the entry in the area of about 1174. Notice it moved up to the 7710 area. That's about 30 ticks on each contract. And that brings us out for the first really 42 minutes or 45 minutes of trading. Because of the two arrow rule though, we're not looking at taking a trade here or not looking at taking a trade here, although they did work. Again, following the rules, patience, discipline, and timing, and perseverance, you would have met your goals already initially in the Russell, as we saw in the crude oil. The nice thing about the Russell is you were done in less than 15 minutes. Let's look at one more equity market from this morning. Now, another favorite equity market that traders like to trade is the Nasdaq because it's relatively small tick size, moves quite a bit, has very good liquidity. Again, we're going to apply the same rationale, the same logic, the same filters as we've done on the previous two markets. What we're looking for is the pit open occurring right here at 6:30. If we look back, we notice that we've already had two down arrows in the same direction. So following the two arrow rule, we are skipping this trade. All right, no trade here. First trade setup that we had was right here, a long trade. Very nice trade to the upside. That was right again within a minute of the pit open. Following the two arrow rule, you had a second re-entry here. Now notice, if you can trade two contracts, you want to keep that runner going. The entry here on this was right around 46, 47.50. Notice we moved all the way up here to the 46.58 level. That's roughly 40 ticks on one contract. And then of course you had a re-entry here. These subsequent entries that occurred here and here, again, are being ignored because of the fact that they've already satisfied our two arrow rule in the same direction. So again, as you can see, in this particular instance, in the first basically less than 10 minutes, you've had a significant movement in Nasdaq and should have met your trading goals for the day. Again, the thing to come away with, as I'm sure a lot of you know, is trading is not a marathon. Trading the markets is not really designed to be there for long periods of time. If you trade at the opportune moments, and that is at pit opens or after major news events, using this type of a trading approach, this is a momentum based trading approach, you'll do very well in your trading. And again, once you reach your goals or come very close to your goals, the key is to stop trading. Otherwise, you're going to start to give a little bit back. All right, so I hope this was helpful. We saw the crude oil contract, we saw the Russell, we saw the Nasdaq in trading for less than 30 minutes on each one of these trade sessions being nicely profitable for the session. Thank you for watching. I hope this was helpful, and I hope this will help your trading in the future. Thanks again, everyone. Bye-bye.